we get more than $2 million
You're
invested, the
using
other investors will get their 2 mil
okay.
back, and then we have more money for the company and like that. So, or something like that. I don't know. It's not.
So you're using investors' money to invest in other people.
No, we're building a company, dude. We're building a website.
Okay, yeah, yeah.
It's not a
So like,
pyramid
so
scheme
you're
or
also
a
gonna run like
Ponzi
ads in
scheme.
there?
It's not a Ponzi scheme or a pyramid scheme. Okay. I don't really know how to explain it because I didn't explain that very well, I guess.
See, now this is the point of the video where you'd think he'd stop and explain how his business is not a Ponzi scheme. But what he does is he goes on and explains how it's clearly a Ponzi scheme as if he's explaining it to a child.
Investors
I mean, I
invest.
kind of, I get your drift.
Investors invest money. If we reach the expectations of the investors, they invest more money with hopefully new investors as well. And then they are essentially paid back through either equity that's not diluted, or they just get their money back as more investors have invested money. So it's like hard to explain, but
Now, a Ponzi scheme, by definition, is when you take investors' money and you just pool it without actually investing it in anything. And when one of them wants to withdraw the money, that withdrawal is funded by future investors' money, which is funny because that's exactly what he was describing doing with his business. Now, obviously, the first time I saw this, I never thought that he was running a Ponzi scheme or even had anything to do with that. He obviously is an entertainer. I don't think finance is his major there, and it's just kind of funny that he was describing a Ponzi scheme unwitting to himself. So he later clarified it with a video here.
okay. First of all, I'm not running a fucking Ponzi scheme. Clearly, I don't know how to explain things very well, but it's not a fucking Ponzi scheme.
All right, so it's not a Ponzi scheme. Now, moving on from that, I wanted to give a quick update on my portfolio, let you guys know how it's done over the past week. So first of all, I think we edged down a little bit this week. So let's take a look. Yeah, so we're down $172. This might be a lot for some people. Once you get your account to like over 20,000, unless you're in super, super conservative stuff, having fluctuations like $100 to $300 is not unheard of. In fact, I'm quite used to having $300 up days and down days frequently. So this week it looks like some money moved out of real estate, some money moved out of bonds, the little bond ETFs that I have, and then they went up in equity. So I think it was overall a positive week in the stock market. But real estate, it does not trade with the stock market. Sometimes it goes totally opposite of it. Sometimes it trades with it, but it's just totally independent of it. So even though it's in the same portfolio, it's totally independent and it doesn't really have much to do with it. So when everything else is going up, a couple $100 went out of that. And since it's 33% of my portfolio, that makes it so this week overall is down. But that's capital appreciation, which isn't the big focus of this. Like I've said a million times, this is a dividend growth portfolio where you don't take a look at capital appreciation as the main indicator. What the main indicator is your monthly growth. So if I look over here, this is, let me center that. This is the main thing we're looking at. I changed the font, so hopefully you can see this a little bit clearer. This is my dividend growth. These are the dividends paid on a monthly basis. You can see overall they are trending upwards. Now, we're past February into March, but if I go back to M1 here, I'm not able to really look at the February dividends paid until my statement comes out. So if I look at the statement, activity, statements, so they have the one from January. When the one from February shows up here, that is when I will do my February update, and I'll update this graph here. But until that happens, I'm not going to update this graph because I like to go by the actual statement, because that's not me just adding together the numbers. That is exactly how much money I made in dividends during that month. Exactly how much money I was paid in dividends. So anyway, like I said, capital appreciation, not the focus. The dividends are. This week in dividends earned, we earned $50 in dividends. Not bad for 1 week. The dividends are starting to come in a lot faster. If I look at all time, I'm up to 576. Seems like just a couple, like maybe 2 weeks ago, I was happy that I just passed the $500 mark. Now 576. It's going up quite fast. The income stream is going up for this portfolio. The capital appreciation can go up and down. I don't know what direction that's going to go. That is such a short-term thing, but I want my income to continually go up. Now, let's take a look at some of the emails. So I saved some of these for you guys to be able to open with you. If I go here, these are the emails that are from Seeking Alpha on my holdings to announce if they have raised their dividends, if they slashed them, what they're doing with them. So this one's from February 27th right here. And this is Maine. And they did a 2.6% increase. So that is keeping up with inflation, but it's an increase. Now let's go to this one here. UNH, which is United Healthcare. Theirs is in line with previous, so this isn't when they raised theirs. All right. Now let's go here. Oxy, again, in line with previous. And let's go here. 10.4% increase from Toronto Dominion Bank. This is one of the few holdings I have that are foreign holdings. I noticed that Canada has some really old banks that have just done their thing for decade after decade, and they've raised their dividends and they've just grown. So I have them as holdings, and 10% increase, obviously, that's dividend growth right there. 10% dividend growth right there. So again, the growth isn't in the capital appreciation; it's in your dividends paying you more, buying more shares of it, compounding, and being able to have that compound from those shares, buying more shares. So if I go over into activity and I look at how much we're paid, like I said, this right here is how much I earned. That's not the same as much paid. If I go over to activity and I go here, this is how much is paid. So any broker, they're going to be able to show you the difference of dividends earned and dividends paid. So let's look at just this week. 10 days ago was last week. I did a purchase, or this is when I moved those shares over. So $2.60 was able to purchase this. Then the deposit and dividend here, I put $250 in here. Okay, so this is the deposit, and this is the dividends here. So $26 in dividends, which made my $276 when that went in. So that bought NOI and NRZ. If you remember, these are the two companies that I added. So these are underfunded, and I'm trying to get them up to their target allocation. So, but $27 here between three holdings, well, SPG and LTC. That's a pretty good income right there, getting paid out. $26 in a week, that's a lot of money when it's totally passive. I think dividend income is one of the few completely passive incomes where you have to do next to nothing to get this income. So you can see that compounding effect working right now. Getting paid these dividends, getting reinvested, that's compounding right now. Now these two companies, they have different payout dates. They pay quarterly, and they're going to pay more because I own more percentage of them. I own more shares of them, more fractional shares of them too. So that's a basic update for this week. I don't want to drag it on too long. To let you know what's in the cards for next week, I have a video I'm going to be doing that's like a more in-depth look into how to build wealth. I think that's particularly useful early on in your careers, early on in your life. Things that I wish I honestly knew about like 7 or 8 years ago. I think I got started earlier than most, but never too early to really get started on this stuff. So this video next week I'm going to do, I think, is particularly useful. And then that's also when I'm going to be going over and doing this video that will be able to be the month update, and we'll get a better look at how February came in. So I want to do that after that statement comes in. M1, I mean, different brokers do it at different times. M1 is usually like, it's the second, it's a Saturday today. They'll usually do it maybe 5 days of the start of the month. They'll have the previous month, the statement come in. I think it will be good. If not, it'll just keep trending upwards somewhat here. I haven't gone through and manually added up how much I've gotten paid. So I'll just wait and find out with you guys. But anyway, I hope you guys have a good week. I look forward to the next video I'm going to do. I think it will be awesome. If you guys haven't already, be sure to subscribe and like the videos, and I appreciate all the feedback. You guys have a good one.